Good afternoon. We've gone from sweaters to aloha shirts here at Park City. A beautiful day again, but the market doesn't care. It's gone straight down. Stock market was down about 1,800 points today, and it's putting the fear of God into investors. It's actually quite a bloody day. Almost all stocks got hit pretty hard. The reason: fears about another wave of coronavirus deaths. We've got a few spikes, Arizona, Texas, and that's scaring the market a little bit. And to double up on that, people are still marching and screaming and rioting in the streets. This is getting very extended time-wise, and not sure exactly what it means, what it's forecasting for our country. And we're about 4 or 5 months away from an election. So with the economy kind of in the doldrums, forcibly so because of the coronavirus, and then we've got some civil unrest, all around police brutality, but it's all around more than that. I'm not sure exactly what. I think it also has to do with the fact that people have been holed up in their homes for a long time. So the psychology of society is a bit dented at this point in time. So we have to give things a little room. Insofar as the market's concerned, it ran up last week. The Standard & Poor's price earnings ratio was about 26 times. That is, it was selling at 26 times earnings. Now, looking at that in a bad economic trough, if you expect earnings to drop more, that raises the multiple even higher. And the all-time long-term average for the S&P has been about 16 times. So stocks have been rather rich, especially rich considering the economic backdrop. So we're in a very uncertain kind of a place. And the politics of the country is still very, very divided and separated. And if Trump and the Republicans maintain control, we can expect tax rates to be where they are, and maybe even more deregulation and perhaps even more tax cuts. If the other guys win, all of them have advocated for higher taxes, more government spending, more borrowing, more printing of money. I don't know. But one can't analyze it. This has to do with social feel, and it's unsettling to the market. What we see right now is a rally that has been a very, very strong rally historically, and now we have a good correction. And we've run the limit on corrections, meaning at what point does a correction stop and another serious decline start? Frankly, we think we're right there. We think we're close to serious decline, and this is the point at which a correction should stop and begin moving up a little bit. So we'll see tomorrow, but we're at the switch. Our thoughts are that if this area breaks, we have to protect assets again. I mean, this gets tough to do, but as long as we can scrape off net gains, there are taxes to pay, but it puts you in a position of less vulnerability. We could be looking with all of the clouds in the sky, we could be looking at a very serious decline as well. Just can't tell. Cold War with China, the election, and the Federal Reserve admittedly just saying, you need more money, we'll print more money. Well, that's banana republic stuff, and after a while, you begin to really wonder about the dollar. So there's some serious concerns going on here, aside from the virus. But we're at the switch, and we're giving this thing a little bit of a wide berth because of the emotion. But serious decline today. Time for some serious thinking tonight. Anyway, have a good day. Let us worry about it. Good night.